Welcome to the Essential Tax Podcast with your host, Mishkin Santa. In each episode, we'll take the complex world of tax, all the jargon, acronyms, and stuff that make your eyes glaze over, and explain it in an impactful way to understand the complex and unknown areas. You can find this show on all the major platforms, including YouTube, LinkedIn, Apple Podcast, Spotify, and on our website, thewolfgroup.com. Now, here's the host of Essential Tax Podcast, Mishkin Santa.
Hello, everybody. I'm going to talk today about foreign rental property. This topic seems to throw a lot of people for a loop. A lot of people don't understand exactly what needs to be done there, kind of how foreign rental property is reported, what forms are needed. I have a lot of people ask me, do I need to report my foreign rental property, on the FBAR, the 8938, all that stuff. So we're going to quickly walk through kind of the foreign rental property rules and make sure that kind of everybody is kind of understanding what's going on there at a very general level. So first and foremost, foreign rental property, the first thing I want to bring up is the depreciation method. There is a different depreciation method for foreign rental property, and you'll find that in Internal Revenue Code 168G2C. Basically, you're going to use the ADS or alternative depreciation system to depreciate foreign rental property. So instead of 27 and a half years, you need to use 30 years. So that's a common mistake I see people make when I'm looking at a tax return prepared by someone else. They'll do the 27 and a half years instead of the 30 years under ADS. I'll also note that if it's I believe it's a pre-2018 rental property, it's 40 years. So that was a change in TCJA that came in 2017, starting with 2018 moving forward. So that's the first big thing. The second thing I want to note is that foreign rental property, generally if it's held in an individual's name, it's reported a lot similar to domestic rental property. Schedule E, Part 1, Form 4562, Form 8582. Not a lot of big differences there, right? Now, if a foreign rental property is held inside a foreign corporation or a foreign trust, then you may have not only foreign corporation and foreign trust reporting, but you may have Form 8938 reporting. If there's a bank account associated with the foreign rental property, then you may have FBAR reporting. So that's when it kind of mushroom out of control. And the last thing to consider is the foreign rental property considered a qualified business unit? Meaning that it's got separate books and records. It's kind of treated as an operating business unto itself. There's a whole series of, what we do at the Wolf Group is we really weigh the facts and circumstances and to see, the pros and cons of whether it qualifies as a qualified business unit or not. And there's a whole series of factors that you kind of want to walk through. But if it is a qualified business unit, then you are going to file the Form 8858. Now, it's got to be operating not in U.S. dollars. So if you're operating in U.S. dollars, it wouldn't make you a qualified business unit. But if you're operating the foreign rental property in foreign currency, and a lot of the factors, tell you that it's more pro qualified business unit than con, then you need to file the Form 8858. And it's not just an informational filing. The Form 8858, if you go to page 2, Schedule C1, there's Internal Revenue Code 987 where you have gain loss, and there could be an income tax hit on what's called a net remittance, which I'm not going to go into the details of what that is today. But let me just say that's a very complicated section. To me, there's only a handful of people that I trust to be able to do a net remittance calculation. Although we train all of our staff to do it at the Wolf Group, it can get quite detailed and quite complicated. The other thing that I want to point out on the 8858 is on page 4, Schedule J, income taxes paid or accrued. If you do have foreign income taxes paid on your net rental income in a foreign country, you're going to want to put that information into Schedule J. But then correspondingly, that needs to flow into IRS Form 1116. And at the very top of Form 1116, there's 7 different baskets that you have to choose from. And you want to make sure you're choosing basket B, which is your foreign branch category income. So it's going to create potentially another basket reporting for your Form 1116 for your foreign tax credits. And then the last part that I want to talk about, or the last couple of parts I want to talk about here, is Form 8858. When you just Google it and you look at the form online, it doesn't have all the moving parts on it. There is a Schedule M which is generally going to be the related transaction reporting. You'll need to add that on, so don't forget Schedule M of the Form 8858. And lastly, there's this misnomer that the Form 8858 carries a $10,000 civil penalty. In some cases, it does. So if I've got a foreign branch or a qualified business unit of a controlled foreign corporation or a controlled partnership, controlled foreign partnership, and I'm filing the 8858 to go with those, and I don't do that, or I do that improperly, certainly $10,000 penalty for the Form 8858 civil penalty could apply. But if it's just a foreign rental property that I hold directly, that just happens to be a qualified business unit, and I need to file the Form 8858, there is no $10,000 civil penalty in that specific regard. But you do need to make sure that you're doing your 8858 reporting, and then you do need to make sure that whoever's doing it understands the net remittance calculations and the foreign tax credit calculations, because I see people go wrong with that all the time. Hopefully you found this helpful, and hopefully it'll help make your reporting for foreign rental property more complete and accurate. Thank you.